Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at technical charts and then try to understand what happened in the market during the previous week, and also plan for a better trading week that's starting from tomorrow, Monday, September 1st, 2025. So let's go to the charts right away. This is a bird's eye view of Nifty and the Banknifty. Next slide. So here we have the multiple time frames of weekly and the daily. Left side weekly charts are showing that it's very much within a trend line channel, and there is a pulse in the up move on the right side. Once again we see that it's also a trend line channel, kind of a flag, hit the top and then retracing, and that's it. On Banknifty you see an ascending wedge, and price had hit the top of that and then retracing to the bottom of the ascending wedge. And weekly charts we're talking about, and right side we have the Banknifty daily charts, which shows that the price had hit the top of the trend line channel and then heading downside. So that's a QQ. So what exactly happened was a 442 points big slide down, big crack down, I would say. That's 1.78%, and it's close negative. It seems like it has given up that hope for reversal and up move, and instead now it's going nearly downside. But remember that it is at 70.23% of correction that had happened some time back, and that is in the last 2.5 years of 72% of rally. So the max correction that was got is still less than 20%, and looks like this could be another pullback or another small correction or big correction. We'll have to wait and watch. Well, Banknifty lost 1,490 points. That's also a bigger down, 2.7%. In fact, Banknifty has cranked down and shows more weakness following the Trump tariff views and all that. But remember, it was just at 12.5% of correction in the last 2 years that has come in from the Banknifty. So we could expect corrections to be much bigger, or at least small corrections would still be required considering the valuations and all that fundamentals for the market to further move up beyond the 26,000 and the 57,000 kind of levels. So let's see what the candlesticks patterns are showing. The Nifty weekly and the daily is what you see there. It shows clear bearishness, wide range bearish candlesticks is what we are seeing on both time frames. So there's no doubt about that, but make note that it is a zone where a previous breakout had happened on the weekly as well as the daily charts. That means the previous breakout could act as a support zone, and then from here a bounce up is possible. So it's very crucial that the price does not fall below this previous swing lows on both time frames. Make note of that. Banknifty similarly, unfortunately it has got a little messed up here. Sorry. Not much issues. We'll straight away go in there and see how the Banknifty's weekly charts are showing. See, that's that was missing. That diagram was missing here, and instead some other diagram got in here. So let's paste that right away with a weekly view. So this is what the candlesticks on Banknifty is showing. Let's do that. And so I'm doing it live. No, there's a mistake. So let's go back. So this is how it looks like. Banknifty is also similar to the Nifty. We have a wide range bearish candlesticks on the weekly and the daily charts. But look at the daily charts of the Banknifty. We see that it's heavily indecisive. It's bearish. It's a gravestone doji pattern, which indicates heavy bearishness. At the same time, note that there was another pin bar or gravestone doji that happened very close to the previous swing low. So that is why it is a major zone where Banknifty may end up the correction and then bounce again. But if it goes below the swing low, things are not going to be that great. But yes, the charts are clearly showing the indecisiveness in the market, especially the Banknifty, and Banknifty has been heavily bearish last week as well. So that's what it is all about. Bearishness all around, on medium term, short term, all of that. Indecisiveness and bearish of the Banknifty. That's how it is. Now, look at Bollinger Japan's on the daily. Nifty is showing an expansion that is big one, and this bearish bias because it's less than the 20 median. And Banknifty expansion even more evident with it, clearly showing that price can further fall down. But look at this, it's very close to the 200 expansion moving average. We'll see that when we see the levels. Moving ahead, if you try to understand the momentum using the RSI indicators and the trend using the ADX indicators on multiple time frames, you see that the weekly, it still maintains the momentum in the sideways itself, but in the daily charts it has slipped into the RSI is clearly showing that it has slipped into the bear zone. So short-term bearishness on the momentum is very much evident, while sideways falling is what the medium-term momentum is as per the RSI indication. And ADX indicator is also short-term bearish, and that bearishness is increasing. But in the medium term, the trend remains bearish, but it's falling. It's a bearishness with a strength, not going up. So that's a summary of that short-term trend bearishness and the momentum bearishness as per the RSI and the ADX. On the right hand side of the screen, we see the India VIX, the volatility indicator or the fear and greed indicator, that has remained flattish despite the huge breakdown in the indices with wide range bearish candlesticks. The VIX has remained flat. That's just the 0.4% of spike that has happened. It's 11.75, still in low volatility regime. And this is the thing that the bears are the bulls could hold on. That's the only hope. If you further see the open interest analysis on the derivative side, we see that the futures has a short covering build-up that has happened on Nifty and the Banknifty on Friday, which is another factor that gives hope for the bulls. That's only two things. The VIX is now spiked up too much, and the short covering build-up on the option futures on Friday. But look at the open interest for the weekly expiries. Make note that the weekly expiry has shifted to Tuesdays for the first time from September 2nd onwards, and September 30th is the usual monthly expiries. But the PCRs of the options are bearish, more bearish in the case of Nifty, and Banknifty also bearish, but closer to the bull side. So PCR is bearish overall, which indicates that the betting is not on the upside. It is there on the upside also, but there's more bearishness as far as the betting is done by the big players or the option writers as such. So what you see in the charts pasted here would indicate that there is this is one way of understanding the support and resistance levels using the options data. We just have one more day left, and Tuesday you have the weekly expiry. So as of now, so it's very crucial. The levels that it indicates is 24,000 and 25,000, very wide range. That means the highest put writing is seen as the 24,000 price level in the Nifty, and the highest resistance is in the 25,000 level. So the second highest is the 24,400 and 24,600. That's a very wide range that indicates the volatility that is expected. And for the Banknifty, the monthly, the level seems to be between 54,000 and 55,000, more or less the same as the last month. So the last month as well. So this is a fresh month that has happened, started on the Banknifty. Make note of that. Second highest level is 53 and 54,000 on the put and call side. So that is also a very wide range. So this is a monthly expiry, so it has to be wide. Now, another way of understanding these levels of support and resistance is using the technical charts, as we know. So that is, these are the levels. You can make note of and have a closer look later on. But this DA means exponential moving averages, and rounding number RN, PSL is producing highs, and GB is gap, PSL is producing lows, and Fib is Fibonacci. So you can later dig deep dive and then look at how these are derived. But overall, very high level. The immediate resistance will be the 100 exponential moving average at 24,628 kind of levels, and after that you have the 20 exponential moving average and the 50 exponential moving average, and then resistance will again come at 25,000. Downside, similarly, the 200 exponential moving average supports could act as very crucial, and that comes in at the 24,384. So 24,400 is going to be very crucial. The breakdown from that could find another support at the cap that's coming close by, and after that it's going to match a 50 zones. So 24,000 is what the level, so we can look for same as what the betting on the options has seen. Banknifty, similarly, on the upside, resistance will be the 100 exponential moving average, 20 exponential moving average, and the 50s. Downside, 200 exponential moving average would be where the supports would be, and if that is breached, it can go as down as 52,000. So 53,000 is going to be major support. If that breaks, it can be big fall. But there is a very good chance that the price can find the support at the 53,400. That's a 200 exponential moving average. So the breakdown from the 53 won't be good. And similarly on the upside, right, it's going to be crucial resistance near the 55,000 where the resistances are seen. So let's move ahead and see how the different sectorial indices performed. So it's a bad story for the bulls here as well, because the only upside is seen at the FMCG, which is less than 1%. The rest of them are down 1 to 2%. Look at the IT, down less than 0.77%, metal down 2.5%, auto down 1.5%, pharma down 2%, reality 4%. So big sectorial impact was seen last selling was happened across multiple sectors, as you see there. So there's no question of having long bets at this point in time, because the momentum all seems to be either mostly in sideways, and some of them may short term it is strong to the bearish levels as well. So share of long positions, and sectors holding on the sideways does mean that we can't take short side bets also. So if we look at these charts on different major sectorial 6 indices, you see that it's well within the trend line in almost all, right? And IT seems to have badly hit, but it's trying to come back. You can see from the momentum RSI climbing into the sideways, and metal is facing resistance, but it's in the sideways on the upside. Auto is also trying to move up. Auto is in fact doing better than all other indices at this point, since you see that the medium term has managed to climb the bull zones. Pharma is struggling there in the sideways, unable to move. FMCG also sideways, struggling to move, and reality index is the same. The sideways RSI momentum is what it is showing. So that's a story about different sectoral indices. Now moving ahead, if you try to understand the heavyweight stocks that contribute maximum to the index, we see that the HDFC Bank has hit the top of that trendline channel and failed to break out beyond that, and once again looks like it's journeyed downside with the momentum slipping sideways and falling down. Reliance also doing the same, sideways and falling down. ICICI Bank also hit hard and sideways, momentum falling down. So all the major 3 sectoral indices has got hit, has slipped to the sideways and falling down. The ID index is although TCS has slightly managed to climb into the sideways, but Infi has managed to climb sideways. TCS has not succeeded, so momentum is medium term bear sounds HL, which is what is causing the trouble. It is a defensive sector, and that's not doing the defensive role as of now. Kodak Bank is having sideways. As usual, it's a contrast stock, doesn't do anything unless it breaks out of that consolidation zone, which now happens. And ITC is showing a green, sort of good candle, but it's still in the sidebar, considering the previous week's fall, and it's taking support at the RSI 40 and then trying to bounce and move up. Sideways ITC. Some GST moves might have benefited, that's why ITC is moving, but otherwise if you see it's all sideways and falling is what's happening in the index heavyweights. Obviously when the index itself shows big red, obviously heavyweights will also go down. The market is also showing big red candles and sideways slipping down. small cap and the mid cap. So it's an across the sector, across the broader market as well for that happened last week. Let's move and see what the institutions are doing. Institutions for setting selling once again 21,000 crores. Yes, equally buying or even more. They're buying 28,600 crores of buying in the cash market level. So the betting was on the downside. Net longs on derivatives, FIs and DIs are moved down last week as well. So institutional selling is the trauma. Domestic institutions are buying because retail, mutual fund, SIPs and all that coming in, money is flowing in, and fund managers are betting on the upside. But how long would it sustain is the big question. Now, if you look at the global markets, that's what we're going to do now. The currencies, the crude oil, the gold, and the US markets, and all of that. So, US dollar index seems to be okay, at the bottom levels, trying to find its way into the sideways momentum. It had fallen down easily, but yeah, it's at 97.85. It's a slight spike up, but it's okay. But look at the look at the USD and our currency pair. You can see that it is at all-time high, which means rupee is at all-time low week. That's nearly 1% big spike up that has happened. That's not good for us, for Indian economy, as I say. The rupee is weakening, and of course it has to do with something with Trump tariff impact that market reacted to. Rupee also seems to have gone weaker due to the same reason is what I would assume fundamentally, although I'm not sure. Now crude oil, look at this, it's okay, fine, and it's at the 60s, which is very good for oil importing country like ours. And the trouble is on the gold that you see there, which refused to correct. It was consolidating at the very top, and now it's once again hitting the new all-time high with bullish momentum rising up. So gold as a hedge instrument spiking up is good when the market is crashing, but the fact is gold spiking would indicate that the money is getting shifted from the equity market is something of concern. Now we look at the global markets, the Dow Jones, Nasdaq and the S&P 500. They have slightly halted or post the breakout, and it is very close to the all-time high, but the momentum is slightly dipped and close red assets. Now the market is near to all-time high. Is good news, but yeah, but the rupee weakness and the gold spike is a law problem. We have to keep a close watch on those, and let's now stop with the analysis and then get to some actionables. Please make note that these are not recommendations of any sort and purely educational only. We have a Cipla which could be a flat breakout. Potential is there, have tight stop losses since the market itself is down. That's a short bet. On right side you have the Tata. That's a long bet. I'm sorry, that's a long bet on Cipla pharma company with tight stop losses. Volumes are good enough on the sell, on the buys, but not that great yet because it has not moved and above. So have tight stop loss is very, very crucial. If a breakout happens, well and good. If the market reverses, you could get a breakout. It's a flat pattern and momentum rising in the bull zones, and trend also looks good. Long side bet. Tractor, and let's see the short side bet. Excuse the sound, it's the outside. It's very close to the road where my recording is happening. And that Alexi could go down to the panel channel bottom. That means the one is to RiskReward is possible because momentum is slipped. The medium term bearishness on the trend also is rising up. Bearish trend on the medium term. So let's see short side bet. That's all to stock picks. Now you have the FNO strategy. Again, this is also not actionable. This is not fully hedged because we are not buying the outside hedges on a Batman strategy because there is hardly anything left. Also, we have it's a switch from expiry date from Thursday to Tuesday, so hardly few days left, but this is the best we can get. Reasonable probability profit in a good range of 24,000 to 25,000. So if price remains there, you can get some money. And the lot sizes depends on the risk that you take. It will be difficult to catch because Monday morning, if it gaps down, you don't know what happens. Yeah, you have to Yes, so Batman is the best strategy nowadays when the volatility is low, which gives some profit, because all the, and yeah, you just have the margin benefit as well. So basically, you're buying inside hedges and taking outside OTM sells and inside OTM helps. Inside OTM head just for that. It gives a reasonably good profit and the wide range. That's it. Again, there's not a trade accumulation, ignore that. There's no options on the Nifty weekly. Let's wrap it up. Market seems to have given up on the upside. Looks like with a heavy bearish fall down, but it has come down to a level of support or a previous resistance zone, and there is a bounce that's possible. But all of last week was heavy bearish as per the candlesticks and as per all the most of the data. And it's closed negative, and the momentum of the trend having giving up in the short term, giving up to the bears. And this is obviously because of the fear in the market of how the Indian economy can be impacted with the US tariffs. And the FIs are selling high, but the DIs are compensating for that. Remember, we had a very small rally compared to the last 2 to 3 years of big 70% of rally. Make note of that. And the way to understand what exactly the market is standing for the next week, how we can predict, the only way is to bucket the different factors in favor of the bulls and the bears and see where does it be. Now the bears have a clear edge, as you can see, but the VIX is low, and short covering futures I have seen. Probably that's because of the new expiry that's coming in. You never know that, but that's only few things in favor of bulls. But for the bears, a lot of things in favor of them. First of all, is trading below the 20 options. OI is bearish. FIs are selling. US markets are red. And momentum and the trend, short-term bearishness. Both the bands are expanding on the downside. Heavyweights are hanging on the sideways. Short-term bearishness there also. Sector indices are also sitting sideways and hanging on there. IT defensive sector is in trouble. And the market also showing big reds, and so it's all because of the global cues, of course, the US tariffs and its impact. It's not just our market, most of the markets are facing the same across the globe because of the US tariff. So until a solution is found for that, until a deal is made, things could go further down, and things could be really volatile, and the more it corrects itself due to one particular reason, it would bounce up even more fiercely, because things are not going to be the same for long, right? So that's the time. So probably these corrections are opportunities for to buy good stocks at low prices. That's what we're going to do. But betting on the downside has really be exercise caution as well, but because reversals can be very quick, as I said before. So my view is mildly bullish. That's all. I'm cautiously bullish, just because it's a major support. So where the Banknifty also is showing that very mildly bullish, very mildly, very mildly cautiously bullish. That's all. Just because it is support zone, just because we get corrected enough and we get the support zone. But I may go totally wrong, because all the things are in favor of the bears. I'm just thinking that there may all this, because an event and a correction happened earlier on the April because of the Trump tariffs already. Okay, I adjusted that, and once again the fear has come in, and market seems to have digested nearly the same. Like it, yeah. So you have to, if you have to believe the charts 100%, that it's bearish, and you have to place your bets on the bear side. The view is bearish, but just because it's a support zone, I'm just taking mild, cautious, bullish approach. That's all. Market view. That's all. I may go wrong totally. Now for the next week, my level is 24,000 to 25,000, very wide range. On the Nifty, and the 52,000 to 55,000, very wide range for the Banknifty. Now, as I had been saying, the 26,000 and 57,000 is the only levels above which we can say market is in the next leg. Until then, it keeps on consolidating, or it may be correcting. And to conclude, I would say that always hedge your positions, hedge your portfolios, and risk management is what trading is all about. And if you don't do the risk management properly, you're out of the game, and you will get your capitals wiped out. So always hedge. And you can also use hedging strategies like cash record puts and all that to invest, get rental incomes and all that. Check out the playlist for that. That's all I have. If you like the content, you can subscribe, like, and comment, and share it to others and all that. And also active on the X with regular technical and inputs and posts on daily basis rather than the weekly. So you may subscribe to that as well if you want. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.